Okay, so today we're first going to go over the some things about Excel. We've had a special request for that, so we're going to do that. So here is an Excel spreadsheet. Your homework this time is in Excel. Have you guys looked at it? Okay, so this may be a review. But here's some numbers in Excel. Like, let's say we want to do something to this whole column of numbers. Like, for instance, we want commas in there. See, it does like, if I do that comma thing right there, it puts commas there. But it also puts 2 decimal places. So you maybe don't want those 2 decimal places. You know, ordinarily in financial statements, you don't have 2 decimal places. And then sometimes in your homework, I don't know if you guys have realized this, but sometimes it has random, some of them have 2 decimal places and some of them don't have any decimal places. Do you see what I mean? So what can you do to solve that? This little thing over here makes the decimal places move back and forth. See that? So where you can make them go all back and forth. Now, let's say you want all these numbers to have dollar signs. You can put dollar signs like that, but now it puts the 2 decimal places, right? Which you don't want. So now you can just move them back like that. But maybe you only wanted that one to have dollar signs, and you know, you can change the numbers up here. You can change it to number format like this, but now, look, we're back to the decimal places. Maybe we want commas on that and no decimal places, right? So you see how you can move all that around with commas, dollar signs, decimal places. Now, sometimes your column is too narrow. See what happened there? Just when I made the column more narrow and it gives you number signs. That just means that somehow or another, sometimes that happens like when you add decimal places or commas or something like that, it'll make it it'll be too big for the column. So just expand the column. Now, let's say we want to add these numbers together. What do? Down here. We want to add them together. Okay, yeah, so we do a sum. Now, we could do plus this number, plus this number, plus this number. Do you know what I'm talking about? Why is that a bad idea? Because if you want to have that sum so that if you insert a number in there later on, it'll automatically be added in there. So you want to do a sum now. So what I do is this sum right here. I just put my cursor where I want the sum to be, and I come up here and put a sum, and it assumes that you want to add those numbers. If that's not what you wanted to do, you know, you can change this somehow. But that's what I want to do right there. So I want to add those numbers. All right, but what happened here? I don't have a dollar sign. So now I can go back and put the dollar sign in there. It gives me this crazy thing. And so I just get rid of the extra decimal places. Okay, but since this is a total, I want to have lines and double underlines and stuff like this. Let's pretend like this is my net income, okay? So you could go right here and put an underline sign. All right, do you see what that did? That's not really in Excel, kind of the normal way of doing underlines, okay? So I'm going to take that one away. That kind of underline isn't what people normally do. Okay, so what people normally do is they do this kind of underline right here. See this little box? And this box has a lot of different choices of where your lines can go. So you could choose this bottom border, and it would look like this. It would put an underline down there on the bottom, okay? So now I'm going to take that one away. That's not really the easiest ways. Here we want a line above it and 2 lines below it, okay? So that's one of the choices in the box. So we can go down here to this choice, top and bottom border. 2, double bottom border, right? Okay. So that's the one we want, so where it has 2 underlines, okay? let's see, what have I left out? You don't really need bold or italics or any of that kind of stuff. We don't need to have colors. We've gone over, and now let's say we're doing earnings per share, okay? And let's say we have 10,000 shares of stock, okay? So that's our number of shares of stock. So let's just put earnings per share right here where my cursor is. So how would we do that? We'd say plus the net income number divided by, which is the slash, the number of shares of stock right there, and it'll put it right there. Okay, so our answer is 3. Is that our answer? Is that the correct answer here? Because it's not exactly 3, right? And even if it was exactly 3, earnings per share is shown with 2 decimal places. So what do we need to do to fix this? We need to go up here to these little things and make it right, put the 2 decimal places in, okay? Y'all know how to insert lines, delete lines, right here? Insert a line, delete a line. We've done the addition. And I showed you how to do plus this minus that. What am I missing? You might want to center these. You don't want to center these, so just forget that. Or left align them, or right align them. I don't know why those aren't moving, actually. But maybe it's just the width, yeah. Okay, so let's do, because they're numbers, never mind. Okay, numbers just automatically stay on the right. Let's see, what else do you want to do? I can't think of any of the other of these kind of things that we want to talk about. Do y'all know any other hints? Anything else you've had trouble with? So I'm going to be looking at your stuff to make sure this number right here, you're not just going to type it in, okay? So when you do your homework, add this up using sum, get this number using a formula. Anywhere there should be a formula, you should have a formula, okay? Because that's what we're trying to learn here. This isn't supposed to be like a piece of paper that you're just typing numbers onto, okay? It's supposed to be that you're using formulas for to come up with your numbers, okay? Okay, so let's say we're going to do it again right here, all right? So we want to take this number. This is our net income. Let's say this is our net income. That's our net income number, and this is our number of shares, okay? So the formula for earnings per share is net income divided by number of shares of common stock, right? With the 2 little additions with preferred and weighted average. Okay, but let's say we're going to do that down here. We're going to say net income divided by number of shares. But to start it out, we have to say a plus net income divided by number of shares. Okay, so we say plus, see how I just typed in the plus thing? And then go up here and point to this number. Just click on it. So it put that cell in there in the formula, right? And then divided by is the slash. See how that works? And then you just point at this number of shares over here, and it put the formula in there, plus E8 divided by G10. Now you could type that in there. You could actually type plus E8 divided by G10, typing in G's and stuff. But that, it's kind of waste time and stuff. It's just easier to point and click, okay? So then, now I've got that formula there. What do I do to make it work? You just hit enter, right? So you hit enter, and it puts its answer there. But its answer does not have the 2 decimal places. So you adjust the number of decimal places right here, increase the decimal and decrease the decimal to to just click it twice to put the 2 decimal places in. Okay? Any other questions about this? Is this stuff y'all know how to do?
I just had a question.
Okay.
About is earnings per share, I thought it was net income minus dividends divided by number of shares.
Okay, yeah, so let's get what the formula for earnings per share is. Earnings per share. The formula is, in general, net income divided by number of shares, right? Which is what we did right here. But remember, we had that complication. The formula is a little bit more complicated than that because what we're talking about is earnings per common share, okay? So just assume that these 10,000 shares right here were our number of shares of common stock, okay? So to get to our earnings per share for common shares, we're going to take net income divided by preferred dividends. Not minus preferred dividends, okay? Net income minus preferred dividends, okay? Because preferred dividends are more automatic and they get them first, we're really more concerned about the common shareholders in this formula for earnings per share. So we subtract out the dividends that are going to the preferred stock. And it's the weighted average number of shares of common stock. Okay, so by weighted average, what we mean is that we're going to get the average number of shares of stock, on an average day during the year. Because it could have been that we had 0 common shares of stock at the beginning of the year and then 10,000 at the end of the year, let's say. And to find out the average, weighted average, if those 10,000 came on July 1st, we could just take this number plus this number and divide it by 2 and it would be 5,000. But we should weight it by the number of days that, and we're not going to go into that right now. We'll do that when we get to a problem. But we should weight it by which day the 10,000 came about. See, if they came about on December 30th, it would be like most of the year we had 0 shares, and then all of a sudden on the 30th we had 10,000. So the weighted average would be, something like 300 or something. But yeah, we won't go into how to calculate it just yet. Do y'all get the idea that it depends on which day it happens? Okay, so that's the formula. Kyle, are you straight on that? Okay, you subtract preferred dividends. Yeah, okay. And it's the preferred dividends that were that are due for this year. Okay. Anything else about Excel? Because, a lot of your homework is going to be using Excel. So it's important, like if you have a question. So somebody emailed me a question, and that's really good because that prompted me to say, oh yeah, maybe we should just cover a little bit of that, So if you do have a question about your homework, you can always email me something about your homework with questions. And that's another reason to kind of get started on it early, to allow, give time for me to look at it if you have a question. All right? Okay. So we're using Excel a lot in this class for homework, and the reason is because people out in the workplace really use Excel. Have we talked about this fact? A lot of times, this is, for accountants, this is like everyday life. It's just like a calculator that you do things on Excel. You do a lot of stuff on Excel. It's like, my husband's a judge. He does nothing on Excel. He does not know how to add and subtract on Excel, But for accountants, you better know a lot of stuff about Excel because it's just a tool that you use. Okay. All right, so now what we're going to do is we're going to kind of go through some more PowerPoints in Chapter 4 and talk about some of the things in the last part of the chapter. When is this homework due, by the way? Is that Monday? I mean, oh yeah, that's Wednesday. Wednesday. Yeah. Okay. Well, you've got a lot of time, right? Well, it seems like a lot of time anyway. Okay. So maybe start on it this weekend or something. So if you have questions Monday, you can ask me, you know? Okay. It's not that hard homework, but it incorporates some of the things it incorporates what we did Monday. Remember what we did Monday with single step and multi-step income statement? So basically what the homework is a multi-step income statement, then plus with some little weird things thrown in that we're going to talk about today, okay? So it's not as straightforward as what we did Monday, but it does have some weird things thrown in. Okay, so now we're going to start talking about some weird things, okay? Various income items is what we're going to talk about. That's what they call them. So there's 4 little categories of various income items, and remember I told you to maybe take a look at those before class so that you would know, kind of have a preview of them. And they are I want to find the little box that they're listed in. Oh yeah, on page 177. Now there's 4 things listed on page 177. And then I forgot they split up these boxes. Now there's another box on page 181. So there's 4 things on page 177 and then 3 more things on page 181. And they've kind of divided these up into 2 different types. These boxes are 2 different types of income items that cause us to do the income statement a little bit different if these guys are present. So these are pretty much all things that are going to modify our normal income statement. So the first one is unusual gains and losses. And then the next 2, discontinued operations and extraordinary items, they are kind of a new section on the income statement. And then the last one, the non-controlling interest, is a new section on the income statement. So let's look at the income statement on page 178. So before we go through the PowerPoints, we're just going to look at this income statement to see what we're talking about here. So let's look at the first, number 2 and number 3. Discontinued operations and extraordinary items. Do you see those on the income statement? Discontinued operations and extraordinary items. So on this income statement, they have a bunch of stuff in red. Now, let me just first say, wonder why they put that stuff in red. Is an income statement that a company does it have that red stuff? No. This is just highlighted to say, here's what we're talking about here, okay? So when you do your income statement, no need to put these items in red, you know, just have everything in black like normal. But we're highlighting these things because do you see where income from continuing operations is? That's our normal number like we're used to coming up with. All that in black above that is what we did in the first part of the chapter. Now the red part is what we're talking about now. So remember how we came up with the income from operations and then we calculated income tax? Well, actually, we've renamed this income from continuing operations. Why does it say there income from continuing operations? Ordinarily, you know, back then it said income from operations. The reason it added the word continuing there is because we have a discontinued operations, number 2, on this income statement. So we added that word continuing there, and then we put discontinued operations next. We have a discontinued operations section, and then we have an extraordinary items section. Okay, so see how number 2 and number 3 are added onto our income statement under the things that we've already talked about and discussed, the continuing operations. Okay, so, and then we come up with net income. So my point is just this. Those are items that we have not seen before that are added to the bottom of our normal income statement. And also look at the earnings per share section. The earnings per share section has earnings per share disclosure for both of these items. So instead of just one earnings per share number, we have a lot of numbers to show what earnings per share is for each of these things that we've added, okay? Because so now how important are these things then? I mean, my goodness, they're taking up, you know, they've added a whole nother, it's as big as the other section of the income statement. These are very unusual items and they're, you know, pretty important. Okay, so now let's just go through the PowerPoints. I just wanted you to kind of get a, you know, see where we're trying to get to here. So unusual gains and losses. Here's some examples of the type things that we're talking about. Usually we're talking, well, we are talking here about things that are not part of our continuing operations, or not, I'm sorry, not part of our operations. These are not part of our primary line of business, but they're unusual things like these things here that if they're material, we need to disclose in a separate, in a specific way. Now, if they're not material, they can be lumped in with other stuff, like other expenses. You know, they could just be lumped in with some kind of other expenses and not really identified. But if they are material, then we should like separately, what do we mean by material? You know, big enough to make a difference. So if something's big enough to make a difference, it's over this certain materiality limit that we've set for ourselves at the, you know, for the financial statements. If it's over that line, then we want to separately disclose these. Now, the major ones of these are that first one that I've highlighted, write down or write off assets. So at the end of the year, you have a certain amount of money in your, a certain value in your inventory, okay? Let's say inventories. Your inventory is valued at a certain way. You've gone and counted it and that sort of thing. And it may be that you have some things in your inventory that are very old and almost useless. So what would be an example of that? If you have a bunch of iPhone 2s sitting around, was there such a thing? A 2, a 3, whatever it is, you know, like, how valuable are those? Like, maybe at the time they were worth $300 a piece, right? I don't know. I don't remember back that far, really. Maybe they were worth $300, and you've got them in your inventory at $300. Are they really worth $300? No. So if you need to write something down or off, and it's going to be a material write-down, then this might be an unusual gain or loss, okay? In point of fact, you probably would write little things in inventory down all the time. This is just a normal, you know how the sales rack goes with clothes, to where all of a sudden clothes aren't worth but $3 when they used to be $30, right? So a lot of times you're just going to have to write inventory down. This isn't an unusual thing. But if it's a very large number, then you might have to separately disclose that. Same thing with receivables. You're all the time writing, what are we talking? Somebody owes us money, they may not pay. Now, you write these sort of things off all the time, but if it's like your biggest customer and it's going to be a super material amount, then it may need to go here. Okay, so you get the idea, unusual gains and losses, and where do these things go? Now, the chart over on page 171, this is one reason I wanted you to get familiar with it, can be very helpful here. Because what it says here is show in a separate section above extraordinary items in a place marked other revenues and gains. So what do they mean by that? We have an example. If I can, oh yeah, on page 170, an example on page 170 that, see how it's just separately disclosed on the income statement. And then let's see if there's an example on this big well, it's and one thing they do say in the book too is that unless they tell you otherwise, it should be reported in other revenues and gains or other expenses and losses. So you know where those two sections are on the income statement, right? Before the net income part, right before net income, there's an other revenues and gains section. So that's where these should ordinarily be shown, and for our purposes, that's where they'll be shown. There can be some, difference in this. But you might want to look at the rest of these as far as what kind of things are also on this list. Okay, this is just showing you how unusual some of these things are. The extraordinary items, this is in the Fortune 500 companies, 24 of them had extraordinary items, not very many. Okay, so the next one, oh, and one thing also I wanted to point out about this one is these items are, look on the chart on page 177, either unusual or infrequent, but not both. So the key there is the or. They're either unusual or infrequent, okay? So I've circled the or there, and I've written down out beside here other gains and losses. So that's how these are treated. That's what you need to know about these. These are in the other gains and losses section, and it's either unusual or infrequent, okay? All right, so now why is the or important? Look down at the extraordinary items, and it says both unusual and infrequent. So I circled the and on extraordinary items. So you see the difference between those two. It's just it's a big difference, but that helps me remember, the or and the and. That is the key there. All right, but now we're looking at discontinued operations. What are discontinued operations? That's when a company gets rid of a component of its business. Now, what do we mean by component of its business? That would be a segment that they keep track of financially and keep track of the net income and operations for separately. And so it might be that Ford, for instance, one component of its business might be trucks. If they were to get rid of their truck division, so if Ford were to, that's what we mean by discontinued operations. We are no longer continuing the operations associated with the Ford truck division. And now we're just going to have our car division and whatever else that Ford has. Okay, so if we eliminate the truck division and we are not going to do that truck division anymore, we're not going to sell trucks anymore, then that's called a discontinued operations, okay? That's what that's called. Now, as we saw before, we put those discontinued operations in a separate section on the income statement after our regular net income. Let's just call it our regular net income. So why are we separating it out to that extent? Why are we taking this one income item and putting it down there in an entirely separate place? Well, it's because we want to separate, since we're no longer going to have the trucks, we want to be able next year to compare our income statement items this year with our next year's without the trucks. We're completely taking the trucks out of the income statement so that they're not included in all this above here, and they're only included down here in the discontinued operations, so that next year when we don't have the trucks, we'll be comparing apples and apples. Do you see what I mean? Okay, so the things that, let's just see an example. The things that we report here are, we're going to report the loss from this operation. Okay, so the loss from trucks, and that'll be one number. And then we're going to also have a loss on disposal of that component. Okay, so we're separating out these two features. This is everything that happens with the trucks this whole year. All of their income is included in there, and so that only cars are up on the top. Okay, so the loss from operations means the trucks did not have a net income this year. They had a net loss. Okay, we got rid of them. They have a net loss. What kind of things do you normally get rid of? These things normally have a net loss, right? You're not getting rid of a profitable thing, for sure. The trucks aren't working out. They hadn't been working out for years and years, and we're going to get rid of them. But when we decide to get rid of them, we have to separate out their current year loss, okay? And then we also separate out the loss on disposal. What does that mean? Well, we have places where we used to build trucks. We have a bunch of salesmen that used to sell trucks. I mean, we have a lot of things that when we get rid of the trucks are also going to have to go, and we're selling most of that at a loss or getting rid of it at a loss also. Okay, so we're separating out the loss from operations and the loss on disposal. Okay, so the other kind of unusual thing about this is it says net of tax. So these discontinued operations are shown net of tax. So look at the top part of the income statement. Is anything up there shown net of tax? No, the answer is no, okay? Everything up there, you add everything all up, you calculate tax, and you're done. Tax is one item on the income statement, right? But this thing, as a matter of fact, tax is an item that's up here before this discontinued operations. So we calculate tax on the continuing operations and put it up there, but we also show the tax effect of discontinued operations in this section, okay? So this is a really key thing, super key. These are net of tax. You can do it either two ways. You can show the entire loss and then show the amount of the tax and then show the net amount, or you can just show the net amount, okay? All right, so we'll keep going on that. Yes?
Go back, please.
Yeah.
When the time to 4,000?
That looks like a mistake to me. I think they didn't add right on this slide. Yeah, it should just be 500. Yeah. Well, for that matter, where does the 19.2 come from? Yeah. 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 Oh, yeah. It should be 800. Oh, yeah, and then the 19.2 comes. Yeah, so the 504 should be 800. Yeah. Yeah, okay, good. Accountants should catch these things, right? That's good. Okay, so this shows you how discontinued operations are shown. Okay, remember that last black line, if we didn't have these discontinued operations, this last black line here would just be net income. But since we have them, it says income from continuing operations, and then we separate out the discontinued operations. Now, the good thing about this particular slide is it shows you what the tax effect is. No, it doesn't. Well, it kind of does. All right. So, so income from the pizza division, I'm going to spend a second on this. Okay, so apparently they're getting rid of the pizza division here. Net income from the pizza division was some amount, and then the tax was 24.8, and then the net of tax number was 54. Okay, so this is, they made money on this division, right? They made money. They made $54,000. And then let's just think about this for a second, because the net of tax can get a little bit confusing at times. They made $54,000 on this pizza division. This tax amount right here is an expense, right? Since they made money. Okay, so this number up here, they don't tell us this number, do they? How much they made from that division. What is that number? Jeremy. What is this? How do we get this number up here? Add them together. Okay, so this number was 78,800, right? 78,800 less the tax equals this net of tax number. Do you see what I'm saying? Okay, now we're going to do something a little bit different. Let's just say the net of tax number was a loss. Let's just say they lost money on this division last year, which is normal, right? Usually get rid of these lost divisions. Okay. Now, let's just say that this number right here was also 24,800. But let's think about what is the tax effect of when you lose money on a division. Okay, first off, I'm just going to say that this number up here would also be 78,800, okay? But it's a loss, okay? This $24,000, instead of being an expense, see how this one was an expense? This one is a benefit, okay? Key thing here is when you have a loss, it reduces your taxes, and it's a benefit to you. Just like when I give money to charity, I'm paying money out, right? Let's say I give $1,000 to the Cancer Society. What's my net from that? If I give $1,000 to the Cancer Society, what is my net effect to my pocketbook from that? So let's say my tax rate is 30%. 30% of, I get a tax benefit of 30%, and my net effect is only $700. So when I give money, charitable money away, I think to myself, well, I'm getting a benefit from that because I can deduct it. This would be money that I would be sending to Uncle Sam, in effect. I could just not give the $1,000, and I would have to pay Uncle Sam $300 more if I didn't. So do you see how I'm really only paying Uncle Sam $700? No, I'm paying Uncle Sam $300 less, and I'm paying, you know, the Cancer Society $700. It all works out to where I'm out, you know, only $700 from this contribution. Do you see what I'm saying? I'm getting a benefit from paying out this $1,000. It's netting me $700. So business people always think of net of tax effects. Anytime they spend money or get money, they think about net of tax. Now, on the other hand, if I make, let's say I'm have some kind of income of, let's say my net income is $40,000. I mean, let's say my income. My W-2 income is $40,000. What's my tax rate? I'm always thinking about this. What's my tax rate? It's maybe 20% in this case. So that's $8,000, right? Is my tax, and I'm only left with $32,000. See? So this is me net of tax. And then if I give away $1,000, that's really only $700. Are y'all following all this? Okay. So this is the deal with tax benefits. I just want you to understand how tax benefits work. If you have a big loss, that results in a benefit to you. If you have a big profit, that results in a tax expense to you. And you subtract them in both cases. See?
So you're paying $78,800, and then you're also paying $24,000 to Uncle Sam.
No. Okay. No. So, good point. In this situation, how much tax are we paying Uncle Sam? We have tax up here of $184,000. This is tax from continuing operations of $184,000. Okay? But we also have a tax benefit right here of $24,800. This is our benefit from the discontinued operations, right? So this is an expense. This is a benefit. Really, we're only paying Uncle Sam, that minus that, $159,200 is what we're paying Uncle Sam.
So you only write one check?
One check, yes, one check. So what we call this, and this isn't covered until a slight bit later in the chapter, but you really have to understand it here. This is tax allocation. We're allocating our entire tax expense of $159,000 between two places. Part of it showing up here and part of it showing up here. If this is a benefit, then, we'd be reducing our taxes. If this was an expense, we'd be increasing our taxes there. Okay, so any more questions about this part? Does that make sense, Jonathan?
I think so.
Maybe a few more instances and it will make sense. Okay? All right. All right, so that's discontinued operations. This is a very confusing part, the tax allocation part. Oh, well, here we go. We're now talking about it. We separate out the taxes for continuing operations, discontinued, and extraordinary. So what things are those? On our list of 3 things here, numbers 2 and 3, right? Numbers 2 and 3 are the ones, discontinued operations and extraordinary items. Those are the ones that we show net of tax. Separate out the tax. So those are the ones that we do the tax allocation on. And it's called intra-period tax allocation, meaning within the period. Intra-period is not inter-period, but intra-period. Within this period, we're allocating the tax. Okay, this is another example of where if we had a gain, the $100,000 is a gain, we subtract out the $30,000 to come up with our $70,000. But also, if we have a loss, we subtract out the $30,000 benefit. This is a tax reduction. See, they explain there that's a tax reduction to come up with our number. So in this case, our $75,000 tax up there on the second line would be reduced by the $30,000 to get our net tax for this company of $45,000. And in the one previous to this would be a tax expense, so we would add those together, and this company has a total $105,000 in tax. Okay, so now we've done number 2, the discontinued operations. So now we're going to extraordinary items. Okay, so extraordinary items are reported separately if they're material. So this material that's bolded here is an important concept that all these things are only reported separately if they're material. Okay, so if they are material and they're both unusual and infrequent, then they report this, the company should report this net of tax in a separate section after discontinued operations. So now the order of events there in the book on page 178, the order of events there is very important. What always comes first? Discontinued operations. And then what always comes second is extraordinary items, okay? So that order, you have to maintain the order. Don't randomly decide where to put things. Now, do discontinued operations go up there in the top part? No. Make sure you put them down there in the bottom, separate. And they're reported net of tax. So, in other words, the tax is allocated within the period to those three places. Now, so this is a time where we're going to say what kind of things are extraordinary. They have to be unusual and infrequent. Okay, so in this case, we had a tobacco farmer who had hail damage where hail is rare. Okay, so they've said hail is rare, and so this is unusual and infrequent, okay? But in the next one, in Florida, your citrus, we had frost, in other words, and it messed up our orange trees. Now, is this unusual or infrequent? Well, I don't know, y'all are not agronomists, are you? Maybe you don't know how common it is to have frost in Florida. Anybody from Florida? Right. I mean, who's to know? But I happen to know that this happens every 4 years or so. It's not all that unusual. So this is not an extraordinary item, okay? Now, this, they sell the only investment they ever had. This is the clue here. They sell some stock in a company, and it's the only investment they ever had. And so this is definitely infrequent, okay? On the next one, they have a whole lot of stock, and they had their first sale, but they're probably going to have several more, so that's not an extraordinary item. So we had a rare earthquake. See, they tell us earthquakes are rare, so that's a yes. And then we had a bond issue loss, and they a lot of times have bonds, so that's a no. So do you see what we have to do is go and look and see if it's unusual or infrequent. Now, on page 174, they give you some clues that you should know about. And this is part of reading everything very closely. On page 174, at the top of the page, like on about the 10th or 8th line, it's bolded and it says, "These things are extraordinary. A major casualty such as an earthquake." See, earthquake was one of our choices here, right? So major casualties such as earthquake are what? Extraordinary items, okay? And expropriation. Expropriation. Yeah, thanks for that word, right? That means that the government takes your stuff. So examples of this is sometimes South American governments have been known to take your oil refinery. Thank you very much for building the oil refinery, Mr. Exxon. We'll just take this over and carry on from here, right? So sometimes governments, unstable governments, companies will make investments in other places, and the government decides not to allow them to continue operations, and they just take that over and continue on. That's called an expropriation. So what is an expropriation? It's an extraordinary item. Sounds pretty unusual and infrequent for a government to take over your oil refinery, right? Okay, so the next one is a prohibition under a new law. So what does that mean? What is a prohibition? this also involves the government, right? Deciding that something that you make is illegal. So let's say the government decides that cigarettes are illegal, right? Now, whoever the cigarette companies are going to have an extraordinary item. You know, back in the day, we did have a prohibition, right, of alcohol. So the alcohol companies there were alcohol companies that were in business before prohibition and now are still in business. But they had well, assuming this wasn't the case back then, that would have been an extraordinary item, right? They would have had a big loss as a result of that, right? That would be an extraordinary item. Okay. All right, so the last one out of our 4 things is non-controlling interest. Now, companies combine their operations. When a company owns another company, they combine their operations most of the time and report together. You know, like if Procter & Gamble owns, let's say there's a company called Prel that makes shampoo. Okay, if they own 100% of that company, they usually add in all of their subsidiaries and report as one big Procter & Gamble, right? But let's say Procter & Gamble only owns 90% of Prel, and there's somebody else owns 10%, okay? The Procter & Gamble is considered the controlling, they are able to control everything that goes on at Prel because whenever there's a stockholders meeting and they vote on anything, Procter & Gamble's always going to win, right? Because they own 90%. They're always going to, whatever they vote yes to is going to happen, okay? So they're the controlling company, and that's why things are consolidated together because they control all of these operations. But there's somebody that owns that 10%. They're just kind of along for the ride. Probably what happened is they didn't want to sell their stuff. They were just happy to keep their stock and not sell to Procter & Gamble. But this company is the non-controlling company, meaning they do not own more than 50% because they can't control anything. They can't control when the stockholders meeting is, what kind of shampoo they make, or anything else because they only have 10%. So, if Procter & Gamble were to put what they do is they put all 100% of Prel's operations in with theirs, right? But then they have something called the non-controlling interest that they pull back out of the statements right at the end. Do you see what I mean? It's like they're taking this 10% out and say, this isn't really ours. But we're putting it all in there and then we take the 10% back out. That's the non-controlling interest. Okay, so the parent company had consolidated income of $8,634, but then they had some little bitty number with the non-controlling interest that they subtract out to get the net income for the parent company that they have that's really theirs. That other 10% or whatever is not really theirs. So the rules are that if you own more than 50% of a company, then you consolidate their operations in with yours and include their net income and everything in with yours because you are in control of that company. But you take out the non-controlling part down there at the bottom line so that we just have the net income. At the end, we're just showing the net income that you have control over. Okay, so this is an important point here that this is not an expense or a dividend or anything else. It's just a way of allocating the non-controlling interest, allocating out between what we control and what the other stockholders control. And so it goes down there at the very bottom, okay? That goes at the very bottom. All right, so here's our summary that we've looked at before. Earnings per share, we've already talked about. kind of in how to calculate it, so I'm not going to go over that again. Just to show that it goes down there on the bottom, and we've kind of talked about before that you have to allocate it between all of these extraordinary items and discontinued operations. Okay, and now we want to go into these changes and errors. Yeah, okay, so I want to have enough time to do a couple of problems if we do have